Namaskara and welcome back to Tax Talk by TNC Sridhar, the channel where we make tax simple, clear and easy for everyone. In today's episode, we are diving into a topic that's often confusing yet extremely important: NRI taxation in India. Who exactly is an NRI? What kind of investments can they make in India? How are their incomes taxed? And how does their residential status affect everything? Stay tuned till the end, because by the end of this video, you will clearly know how to identify if you or someone you know qualifies as an NRI and what tax rules apply to them. Now let's start with the basics of who is an NRI. NRI stands for non-resident Indian, but that does not mean anyone who is living abroad automatically becomes an NRI. The definition of NRI is clearly explained under the Income Tax Act. Section 6, which determines the residential status of a person based on the number of days they stay in India during a financial year, irrespective of the citizenship of that person. Let's simplify this. If you stay in India for 182 days, that is roughly 6 months or more in a financial year, you are a resident. If you stay for a period less than 182 days, you are generally considered a non-resident. However, there are also an additional rule. If you stay in India for 60 days or more in the current year and 365 days or more in previous 4 years, you can still be considered a resident. Now at this juncture, the terms that are coming are: number one, which talks about financial year, it says current year, it says previous year. Now what are these different years that mean? As simple as that. Income tax deals with the money that you earn during the financial year, that is called the previous year, because the income tax considers the assessment on the income in a subsequent year. That is why the word previous year is used. The previous year is very simple, it is the financial year only. So here when we talk about 4 previous years, that is 31st March you say the closing year, from that you go back 4 years. In that 4 years, 365 into 4, so many number of days. Of that period, if you are in India for a period of more than 60 days or more in the current year, however, the total period of stay in India is exceeding 365 days, then only you will be considered a resident in India. So in other words, in India, even if you are staying for less than 182 days, you can be considered a resident provided you have stayed for a period of more than 365 days in the past 4 years, and in the current year you have stayed for more than 60 days. So you remember, it is not about where you work or where you earn. It's all about how many days you stay in India during a financial year. That will determine your residential status. Now that we know who is an NRI, next big question is, can NRI invest in India? The answer is yes. And in fact, many NRIs continue to build wealth in India through various investment options. Let us look at some popular avenues. So now, let's start with bank accounts. NRI can open special bank accounts like NRE account, that is non-resident external account, where the funds are fully repatriable and interest earned is tax-free in India. The NRO account, that is non-resident ordinary account, used for income earned in India like rent, dividend or pension and interest, taxable. In other words, the non-resident external account, even though it is in a bank account situated in India, it is considered to be an account which is like abroad, not in India. So any money that is coming into that account, it has to be in foreign exchange, not Indian money, foreign exchange, and it goes out. It is like operating any bank account outside India, same position will be there as far as the NRE account is concerned. Now, any bank account that you have in India, which is called as non-resident ordinary account, wherein Indian money can be put and taken out and all those things, it can operate just like any savings account. In other words, any bank account the person was holding when he was in India, the moment he goes abroad, he does not have to close this account to open. He can just designate it as NRO account. So it's mandatory to do that. Now, at this point of time, I would like to clarify that we are dealing with Income Tax Act. I am not going into the depth of the RBI rules and all those things at this point of time. We are only dealing with the residential status and taxability of that income that is going to arise. Now, coming to the next area, a fixed deposit. Now, NRI can hold fixed deposits in both NRU and NRO accounts. NRI FD is tax-free because it is out of the money that is money earned abroad and it is lying in that account. It is considered to be everything abroad, nothing in India. So it becomes tax-free because for a non-resident, only Indian income get taxed. That will come little later. But that is why any FD earned out, any interest earned on FD out of NRI account will be tax-free, while the NRO account FD will be taxable. Now here, the rate of tax that is applicable for NRIs will be 30%. Of course, this is a deduction at source and you can always get it back by way of a refund by filing a return on a subsequent time. Next, going to the mutual fund and stocks. NRI can invest in Indian mutual fund and equity shares under the portfolio investment scheme of the RBI. However, the taxation will apply as per capital gain depending upon the holding period of the portfolio. Now, coming to real estate, NRI can buy both residential and commercial properties in India, except agricultural land, plantation, farmhouse, etc. They can also earn rental income and sell the property, tax applicable on the capital gain. So, yes, India offers wide investment opportunity, but taxation rules differ based on the type of income and the residential status. Now, let's decode the heart of today's topic, taxation of NRI income. The golden rule is NRIs are taxed in India only on the income that is earned or received in India. Income earned outside India is not taxable for NRIs. Let's look at the main heads of income that are taxable in India for the NRIs. Salary income. If your salary is earned in India or paid by an Indian company, is taxable in India. The rental income. If you own a property in India and earn rent, that income is taxable. Capital gain. Whenever you sell shares, mutual fund or property or anything, it will attract capital gain depending upon the holding period of either short term or long term. Interest income. Interest of NRO account is taxable as I told you earlier, but interest on NRE account and foreign currency non-resident account is exempt. Now, TDS for NRIs. Unlike residents, NRIs often have tax deducted at source directly at 30% on NRI interest and property sale. However, NRI can claim a double taxation avoidance agreement benefit, meaning if you are already paid tax in another country, you can avoid being taxed twice for the same income in India. So make sure that the right income and the claim of DTAA, whatever is applicable. Now at this point, I would like to take you a little further about the double taxation avoidance agreement which is there. India has agreement with various countries, and in those agreements, so many aspects are considered. Sometimes the income is shared, sometimes the tax is shared. Now, to give a simple example is that, suppose your income is getting taxed in the country in which you have earned that money at say 20%. And in India, the rate is 30%. Now, by chance this gets taxed in India because of any reason. In that case, what happened? You already paid tax over there, so it can't suffer once again here. So, to mitigate that hardship, the concept of double taxation avoidance has come in. So, while making this agreement, so many aspects are taken into consideration. But think of a country where you don't have an agreement at all. In that case, whatever taxes you have paid in that country, that much you can get an offset as far as the Indian taxation is concerned, as far as the quantum is concerned. Finally, let's connect the dots between the residential status and the tax liability. There are three categories under the Income Tax Act. One is called resident and ordinarily resident. Second is resident but not ordinarily resident. And third is non-resident. The resident is taxed on global income. That is, irrespective of from which country the money is coming in, the entire money will be taxed in India. That is, income of both Indian and foreign origin will be taxed for a resident who is ordinary resident in India. Now, a person who becomes a resident by virtue of staying in India for a period exceeding the exempted limits, but he is having income abroad. The source of the money is a foreign income. So, in such circumstances, he gets taxed only on Indian income and foreign income for the business that is controlled in India. In other words, the income that is having an origin in India will only be liable to tax. Okay? Then, as far as non-resident is concerned, only Indian income is taxed. So, for a person who is a resident, global income is taxed. For a person who is a resident but not a resident, being resident, entire global income will be taxed, all right. But then anything having a source abroad, that particular amount will not get taxed. Now, as far as the non-resident is concerned, only Indian income will get taxed. So, you have to keep in mind the three aspects of the sources of income in this regard. So, for a few days you stay in India, the more likely you are to be taxed only on your Indian earnings. Now, my viewers, I am very much thankful to you because with my earlier episodes, there were some queries raising in the comment. Even though that did not relate to the topic that was being discussed in that particular episode, but they became more inquisitive to know more. So, that time I told them that I will deal with this topic when I am dealing that particular episode in which these topics are discussed. It says, my sons are citizens of Canada for more than 10 years and I have advised them to study and take interest in investment in India in mutual fund and the stock market. As India's economy is progressing smoothly and safely, they are PAN card holders but no Aadhaar card. What are their applicable taxes on their earnings from Indian investment and properties, etc.? Now, in this regard, for a non-resident, it's possible the person can hold a PAN card. Anybody who will have some implication of taxation applicable to them, they can have a PAN card. PAN card is a registered income tax person, that's all. The person may not have an Aadhaar card. Now, the significance of having an Aadhaar card is that, whenever you get a refund, the system here asks that your PAN card should be linked to Aadhaar card because ultimately the money has to go to the designated bank account. Now, since you don't have an Aadhaar card, that case the system will block it at that point of time. So, there is a provision that the concerned officer has to make a note there that this person is a non-resident. Once your status is put in the system as a non-resident, then your linking of Aadhaar is not necessary. So, if you don't have an Aadhaar card, your refund will be released. But if that change of status has not taken place in the system, then there is every possibility of your refund getting blocked at that point of time. This is a technical thing which can be sorted out. Now coming to the investment part is there. The person can definitely make an investment in India. There is no difficulty. Whatever income earned out of that has to be declared in the appropriate heads, and he can make the property and he can earn, and it will be good for the country's economy and in that. Now to sum it up, an NRI is defined by the number of days he stays in India. NRI can invest in various assets from properties to mutual funds. Only income earned in India and received in India is taxable for NRI, and your residential status determines your taxability. Understanding these basics can help you plan your finances wisely and stay compliant. If you found this episode helpful, don't forget to like, share, and subscribe to Tax Talk by TNC Sridhar, where we simplify tax for everyone. Watch us on every Thursday at 12:30 p.m. Drop your questions in comments, and in the next episode, we'll discuss the tax rules of Indian residents working abroad temporarily. Thank you for watching, and until next time, stay aware and stay tax smart.